transport improvements like better rail connection between Manchester and Leeds. There are also jobs moving into the region. Interest rates are softening too, which supports borrowing and keeps rental demand going. It's a combination of things that keep things moving. There are risks to consider. Material and labor costs or economic shifts could affect things, but the North has shown it can handle ups and downs. Hello everyone and welcome back to the channel. Today we're looking at what's next for UK property with a focus on the north of England. This is for anyone interested in property investment or keeping an eye on the market. We'll cover why the north matters, what's happening with prices, and the yields in commuter towns. Let's get started. The north of England has been gaining attention lately. It's a region that is starting to stand out, and we think it's worth a closer look. We'll break this down into three parts: the region's appeal, price trends, and rental yields in commuter areas. First, why the north? It's a region with some clear strengths. Cities like Manchester, Leeds, and Liverpool have jobs and ongoing development. Beyond that, there's affordability and decent transport links. It's not the only part of the UK growing, but it's got a combination of factors that make it relevant for property. Next, let's look at the prices. In the north, we're seeing gradual increases, likely 4% to 6% this year. Cities like Newcastle and Sheffield are part of that, but commuter towns are also in the mix. Places like Warrington near Manchester or Wakefield near Leeds have homes around £200,000 to £300,000, and values are rising steadily. It's not massive, but it's consistent. Now, the yields in commuter towns. These areas are seeing rental demand partly due to hybrid working and good transport. Towns like Darlington, an hour from Newcastle, or Bolton near Manchester can offer yields of 6% to 8%. For example, a £250,000 house might bring in £1,200 a month in rent. That's higher than some southern areas where yields are often 3% to 4%. It's a practical option for investors. Some specific places stand out. Warrington between Manchester and Liverpool has train links and yields around 7%. Huddersfield near Leeds has affordable properties and steady rental interest. Smaller towns like Chorley or Stockton-on-Tees also see yields above 6%. These areas benefit from their location and lower entry costs compared to bigger cities. So what's behind this? Transport improvements like better rail connection between Manchester and Leeds. There are also jobs moving into the region. Interest rates are softening too, which supports borrowing and keeps rental demand going. It's a combination of things that keep things moving. There are risks to consider. Material and labor costs or economic shifts could affect things, but the north has shown it can handle ups and downs. Development projects and population growth are factors in its favor. It's not a guaranteed win, but it's a region with some solid prospects. So what's next for property in the north of England? We see steady price growth, decent demand in commuter towns, and yields that make sense for investors. It's not a sudden boom, but a gradual shift. For those looking at property, the north offers some reasonable opportunities. And that's our view. What do you think? Are you considering property in the north? Let us know in the comments below. If this was useful, feel free to like and subscribe, hit the bell for more. Thanks so much for watching, and we'll see you on the next one. Bye bye!